Well, Sarah, it's really, as you know, sort of a tale of two cities. You've got retailers in discount, in grocery, and in wholesale, and pharmaceutical, and others that are actually adding hundreds of thousands of employees. And then you've got those, some of whom you just mentioned, that due to the coronavirus and the forced and mandatory closures, really have no cash coming in the door. And as retail industry leaders have been saying for weeks, there were some pretty dramatic actions that were going to become inevitable without relief from Washington. And so I think you're starting to see that now. And, we're certainly pleased that Congress passed the legislation that they did last week, the third relief package. But, we can't get that flowing quickly enough to those businesses, large, medium, and small, and to those displaced workers, because we need them in order to get our economy moving forward again.
Matthew, if those funds do get flowing and fairly quickly, i.e. we get over the administrative hurdles, perhaps the teething problems in administering the money, will that be enough for your sector, or would you have liked to have seen more retail-specific measures within the CARES Act?
Well, Wilf, I think, most of us across industries were pretty realistic that industry-specific relief was not going to be a feature of this legislation. The politics of that are not, were not really very appealing for anybody on Capitol Hill on either party, and that's why you didn't see any. And so what they tried to put into this legislation was relief at the macro level. And so certainly we were pleased that a number of the things we promoted were included in the legislation. Certainly the emphasis on individuals, on workers, households, American families, small businesses, those were all very, very important components of the things we thought should be included. And so we'll see, hopefully, that SBA relief starts moving quickly and the payment to consumers goes out quickly. The big piece now, I think, is the action with the so-called Exchange Stabilization Fund, the ESF, which is the $454 billion that Treasury gets and now can leverage for the Federal Reserve to push out to the regional banks across the country to provide liquidity to these businesses. And that was something that we were promoting, more than 2 weeks ago, along with many, many other business groups and other observers, because, you have to consider that the companies that are most dramatically affected by this are companies that 2 months ago, 6 weeks ago, were solvent and were going concerns and operating businesses, and now through no fault of their own find themselves in this position. And so anyone that was in that position before this started should be able to get benefit from this relief package and be in the same position when we get through this, which we will, and consumers will come back and consumer confidence will increase. But they shouldn't be worse off at the end of this than they were when they went into it.
From your vantage point, Matt, are some of these companies that are remaining open and busy and in high demand, like Amazon, doing enough to protect their workers? Big story went around, and especially now that the New York AG is investigating Amazon firing one of its workers that staged a walkout, one of its workers from Staten Island, over conditions and lack of precautions that the company was taking around COVID-19.
Yeah, so, I would say if you look at many of these companies, look at what Walmart has done, look at what Target has done, look at what Tractor Supply Company has done, they're increasing pay, they're giving bonuses, they're giving more generous benefits programs across the board. So I think, any retailer that doesn't recognize that their most important asset is their employee and their workforce, shouldn't be in business in the first place. That's their number one concern. It should be. We think for the vast majority, the overwhelming majority, it is. And I think that's why you're seeing these great investments. And from just a purely economic standpoint, some of these companies have incredible new business coming through the doors. They need to service that business. We've stood up on our website, nrf.com, job matching program so that those companies that are literally hiring hundreds of thousands of workers can hire some of those workers from the companies that find themselves disadvantaged right now because of the coronavirus closings. So we're trying to put those companies together, find those workers an opportunity to stay attached to the workforce. That ought to be everyone's number one objective, is keeping employees attached to the workforce so that, when we get through this, and we will, we have to remember consumer confidence is down because of a medical condition, a virus. And once we get that beat, which we will, consumer confidence will come back. As Fed Chairman Powell said last week, the difference between this and another recession is that there was nothing fundamentally wrong with our economy when we went into this. And so there shouldn't be anything fundamentally wrong when we get out of it. But we need a bridge to get from where we are now to where we need to go.
There were things fundamentally wrong with some of these retailers. I mean, department stores were not heading into this crisis in good shape. And that is leading some to wonder what the retail landscape of America looks like when we get out of it.
Yeah, I think, Sarah, that's a very fair observation, and we ought to all assume that the trends and the patterns that we saw before we went into this period are simply going to accelerate. And certainly companies that have strong or healthy balance sheets, that have strong management teams, that have great vision, that have invested in consumer engagement, digital footprint, fulfillment, excellence, those companies have strengths. They're going to see them through this. And companies that were not able to position themselves that way before they went into this, I think are going to experience that even more acutely as a result. I don't think that's a surprise. We see that happen anytime there's economic downturns, that the trends simply accelerate. And that may be true for consumer behavior as well. Certainly you've talked about that a lot, you and Wilf and some of your colleagues, about the way consumers behave with their retailers, the way they engage, digital, all those things, I think, are likely to persist even beyond the disruption we have over the next weeks and months as we work through this.